Hi, it's Chris Titley here. As part of the Morgan's Conversations, I'm joined by Grant Hackett from Generation Development. Grant, thanks so much and welcome to Brisbane.
No problem. Thanks, Chris.
Grant, tell us a little bit about Generation Development, the history of the business.
Yeah, so the business has been around about 15 years. It used to be part of the Ausstock Group. We actually rebranded the name to Generation Development Group, and then we've got one subsidiary which is the life business, Generation Life. And yeah, it's an investment bond business that's been growing slowly over the past 15 years and really started to kick up because of the changes to superannuation. So came into the business about 12 months ago with my former BT CEO boss and Craveable Band CEO Rob Coombe, and really changed the business from end to end in terms of the product, the sales, the marketing, the executive, the technology, the sales team, etc. So it's been an exciting journey over the past 12 months, and we've seen the results and really turned the dial on the business, and it's a really exciting time because we do have those regulatory tailwinds.
Let's talk about investment bonds. What are they and how do they play into superannuation funds?
So really, when you think of investment bonds, just think of something that's capped at 30% tax. So if you're paying over 30% tax, there's an automatic tax arbitrage if you were to invest through the structure. I don't like to talk about it as a product because it is a structure like superannuation. It's a 15% bucket. The underlying products are really the investment options, which we currently have 37 of. At the end of the day, within that structure, there becomes a lot of benefits. One is that it's a non-estate asset. So, if you don't want your estate to be contested, or you want to leave a portion of your estate, or you're a grandparent wanting to leave it directly to grandchildren, you can do that. It also doesn't produce capital gains or income. So therefore, if you want to, any legal entity can own a bond. So if you want to have it inside a trust, you can, and it won't distribute anything out to the beneficiaries if you don't want it to, or out to the bucket company. So I really just look at those three key strategies: the fact it's a non-estate asset, the fact that it doesn't have any distributions, and the fact that it's capped at a max rate of 30%. Makes it a very, very attractive proposition for an advisor because it really forms part of their overall strategy. If they are a holistic advisor, I think now, and given the regulatory changes to superannuation we've seen, particularly that $1.6 million cap, the reality is that this really does become part of the overall plan.
And the 37 investment options covers broad asset classes?
Yeah, so we cover all the major asset classes, and we've got multiple options within that, and we're currently looking to expand that menu at the moment to 50 investment options.
And where do you sit in terms of the market size and leadership, etc., and market position?
So in terms of overall market share, we came into the business 12 months ago. We were sitting 5th overall, our main competitor being AU and IOOF. We've actually surpassed Centuria and CommonSure in terms of total market share, and we're number 1 for net inflows. So we sit about 11% of overall market share, but we take about 30 to 32% of overall new inflows into the group.
So again, a comment on the recent result?
Yeah, it's been a great result. I mean, 82% up on NPAT, 72% up on new business, new product sales. We've seen our active advisor footprint, which is really a key metric for us that we've looked at, go from 451 advisors to 776, and we've continued to see that rise on that trajectory in Q1 of FY19. So it's a really exciting time for the business, and we feel like we've got more tailwinds than not at the moment, and really we're in a great position because we are an independent product manufacturer, so we're not vertically integrated to any other larger institutions. Yes. So we kind of sit in that nice independent space. We're very agnostic in terms of not owning any sort of distribution, so we're friends with all the fund managers, but we're also friends with all the financial advice firms and all the key distribution areas in that space.
Grant, thanks so much for your time, and congratulations on what you've achieved thus far, and look forward to catching up.
Thanks very much, Chris. Cheers.